Howdy there, folks. Welcome into tonight's video. Oh boy, do we have a bullish one. Your mind's going to be exploding with bullish positivity after watching this video. Holy smokes, this is no jokers. It's a buy one, get two free. First one up here, a new tech bull market is coming, says Dan Ives. He says it's about to start. Obviously going to hear his perspective on that. I want to share my perspective. Then he's also going to talk about Tesla stock in this video as well. Then from there, we're going to go into this one. We still have long-term positive momentum despite recent market pullbacks, says Katie Stockton, and we're going to do a camera switch as well. Okay, let's go ahead and do that. Then we're going to listen to this gentleman tell us why Nvidia stock is cheap. Yes, cheap. Yes, cheap. Yes, I can't wait to. That's one. I'm looking forward to all three of these, to be honest, and kind of share my perspectives and opinions. But this one, I'm looking the most forward to because that is a highly contested subject, and I am getting absolutely pelted by the sun. And people say, why not just buy a shade? And my answer is like, why would I buy a shade when I could buy stocks? Alrighty, guys, let's get into this. By the way, I appreciate every single person for being here. 34,000, and I believe we're at 400 plus subscribers now. So I appreciate every single person for being subscribed. Thank you so much, folks, as always. Let's get into this.
Director Dan Ives. Dan, good to have you back on again. What is the basis and thesis of your note?
I mean, Brian, it's really about the fundamental story into the second half of the year. We see a lot of strength when it comes to cloud, cybersecurity, overall IT spend. I think we're going to see an uptick. I think we saw this week strong Okta, Salesforce, and others. And then when you look at AI, in my opinion, it's the biggest transformation we've seen in tech in 30 years. And that sets up for what I believe is already a new tech bull market underway.
All right. A lot of people want to come up. I feel like it's 1999 again, although I'm, with less hair on my side, because a lot of people want to come up to me and all they want to talk about is Nvidia. All they want to talk about is AI. All they want to talk about is big tech. And I do worry, Dan, that the market has become way too heavily weighted on 6 or 7 stocks. Is that a reason at all to worry?
Look, Brian, it's a great point. You always have a great pulse on what's happening out there. But I believe it's in 1995, not 1999, 2000. In other words, I think there's really the internet type vibe that we see in terms of spending, maybe similar to 2007 launch of the iPhone. I think the difference now is that the second, third, fourth derivative, this tidal wave of spend, it's just starting. Nvidia is the first one, but this is something we're going to see over the next 12, 18, 24 months. And that's why to us, when it comes to tech, I mean, we've been really pounding the table here because I think a lot of these names going into next year, I think it's going to be really a golden opportunity and what I view as a 3-year bull market for tech.
Well, you made a lot of market bulls out there happy with this note and coming on tonight, Dan. I want to pivot, though, to Tesla if we can. Last time
before we get into Tesla, okay. So what big tech stocks have still upside, in my personal opinion? Well, there's a few. One, I think Amazon still has more upside. Meta, I still think has more upside. Google McDougal, potentially valuation is attractive on Google McDougal, but they're dealing with multiple government issues. That's going to take some time to work through, and that's going to be an overhang on the stock for a while. Apple, there's not a ton of upside there because valuation's gotten very rich and their revenues are literally going down, and their next iPhone does not look like it's going to be a banger by any stretch of the imagination. So Apple's probably in a little bit of a tougher spot in the short term. Nvidia, actually, we're going to get into Nvidia. Nvidia probably has more upside, believe it or not, even though the stock's had a tremendous run. AMD, probably more toward the end of this year and certainly in 2024 as they start to obviously sell through likely a lot of AI chips into 24. Obviously, they've just been lagging. This is really Nvidia's year, 2023. AMD's year is more coming. So they definitely have huge potential in 24 and beyond. And then Tesla, obviously he's about to get into Tesla. Let me hear what he has to say. I'll share my perspective on Tesla, but let's hear what Dan Ives has to say first.
Last call, you had this to say about Tesla.
We remain firmly bullish. I think as we go into the rest of the year, demand will be firm going into next year, especially with Cybertruck. I think it's a table pounder at these levels.
Well, today, Tesla shares, Dan, they fell 5%. One day doth not a trend make, but it follows reports of more price cuts in China on the S and the X. The price of the Model 3 actually went up a bit. Based on that, does your Tesla positioning change at all?
It does. It's actually more bullish because ultimately, when it comes to Model 3 refresh, that's the key. In terms of S and X, cuts there, I view that as table stakes. We're focused on Model 3. I look at Model Y. To me, in China, there's actually been, I think, improvement in demand relative to where I think many thought. And when I look at the overall Tesla story, 1.8, 1.9 million units, I continue to use the bogey they're going to hit. Margins, yeah, we've seen the compression, but I think that troughs the next quarter or two. So I'm actually more bullish. We'd be buyers on this knee-jerk reaction.
Really? Yeah. All right. What does that mean for not GM and Ford? That's not your space. But what does it mean for a Rivian?
Yeah, look, and I think right now, even when you look at GM and Ford, the UAW, that continues, I think, be a big worry if that could ultimately dent some of those plans for EVs. But when you look at Rivian, look, I think me and you have talked about it a bunch. I think Rivian actually demand looks strong, specifically in terms of what we've seen in the U.S. Reservations are there. Supply chain and the production is now ramping. That's why Rivian's part of our EV basket. I mean, we've been bullish on Rivian, despite obviously the hiccups that we saw, many of them coming out. They've turned the corner. And I think this EV green tidal wave is really going to hit the next level into next year, which is why Tesla continues to be their world, everyone else paying rent, despite many of the bears.
Yeah, in regards to Rivian, my stance this entire year has been, and I've said this a million times on this channel and the main channel, if you force me to own an EV stock outside of Tesla, the only one I'd want to own, and I mean literally the only one, is Rivian. And that's it. That's been my stance this entire year. That's going to remain my stance for the remainder of this year. Until I see something that looks even somewhat promising out there in EV land. But I just haven't seen it outside of Rivian. Rivian's the only one. So obviously I have exposure to Rivian because of my Amazon position. Amazon owns a ton of Rivian stock, but I don't own the stock personally in terms of like direct Rivian shares. So now in regards to Tesla, Tesla, they just continue to be in a tough spot. And it's, it's just interest rates. It's as simple as that. It's a much tougher interest rate environment. It's something that's not going away tomorrow. They're going to have to continue to deal with it, and it is what it is. And so it just puts Tesla in a really tough position. Anything that, you have to get a loan for, it's not doing as well right now, and it's not going to do as well anytime soon. So that's what we're having to deal with, and obviously Elon Musk and the team has had to cut price, and they've cut price, and they cut price. And it is what it is. So short term, I'm not expecting much from margins. I'm expecting hits to profitability. Long term, obviously the story's intact in regards to Tesla. Next up here, we still have long-term positive momentum, says Katie Stockton. Let's hear what she has to say in regards to this market and opportunities.
Seen a big run for stocks like Nvidia, extending its gains over 30% in the last 3 months, surpassing its 200-day moving average. Joining us now to read the charts is Katie Stockton, Fairlead Strategies founder and managing partner and a CNBC contributor. Katie, always great to see you.
Good to see you too.
Nvidia, what do you see here?
It actually looks...
That's a cute dress. Let's be honest, Katie Stockton. And by the way, for you guys, you got to learn how to compliment women when they wear something cute, okay? It doesn't mean you're hitting on them. It's just, that's a cute outfit. I appreciate that, okay? Get more in touch with your feminine side and talk to me later.
A short-term breakout within its very steep long-term uptrend. But I wouldn't be chasing it here. I do feel that there's been a loss of momentum more broadly for the tech space. That includes Nvidia. Our intermediate-term gauges are probably at best neutral right now. So we feel that we would hold existing long positions, but not adding exposure until we feel convinced that the corrective phase in the broader market is over.
Okay, and what will you need to see in order to be convinced? And I'm assuming you're talking about specifically the biggest tech stocks, the quote-unquote Magnificent Seven, as some like to call them.
Well, it's been really interesting. So the past 2 weeks, we've had some relief from the weakness in early August. And those 2 weeks have been very largely driven by those mega caps. And I think it shows the propensity of investors to go right back to the existing leadership of the market into weakness. So I do still think that those leaders will take us out of this corrective phase, but I'm not convinced it's over yet. We tend to see corrective phases unfold in like an A, B, C fashion, the B being a counter trend move. And I think that that's what we've probably seen over the last couple of weeks. And perhaps stabilization in yields instills the next downdraft.
Are you surprised by how quickly the market seemed to turn around in the month of August? As we were talking earlier, really a tale of 2 months.
Well, we did get to a place where it was a widespread short-term oversold reading, and it wasn't a very fast and furious pullback, but it was enough to generate that. So from sort of a breadth perspective, it actually was somewhat natural. And of course, now we come into September and there's very weak seasonal influences. So I think we need to assume that we're not out of the woods yet, but the damage really is only short term at this point. So we still have long-term positive momentum.
Yeah, so one thing going for us in the very short term, and when I'm talking about very short term, I'm really talking about this over this next 30 to 45 days, is everybody and their grandmas really talked about, oh, September, October, ooh, what's going to happen? It's a seasonally weak time for the market. Are we going to head down? All these sorts of things. It's been the talk. And so, you know, I always kind of think about, like, what's everybody talking about and already aware of versus not aware of, right? And there's just been so much talk about September, October, seasonal weakness. Oh, boy, is something bad going to happen here, right? And, you know, I take it back to the beginning of this year. Everybody was so convinced the first half of the year was going to be rough. It was going to be a bad first half of the year. And it was anything but a bad first half of the year. Everybody's talking about, oh, November, December, you get Santa Claus rally. And all I keep thinking is, man, maybe September, October are great since everybody's scared about that. And then maybe November, December end up sucking because, you know, everybody's expecting Santa Claus rally then, right? That's the market for you.
A breath that is actually constructive, even though it's pulled back.
There were some who, I'm sorry, there were some who said that since we started with Nvidia, that the lack of reaction maybe marked a top in chips generally speaking, but you just said that now we have another near-term breakout.
It does look like one. It's not one that I'm chasing or buying into. We actually also have one in Alphabet that looks like a short-term breakout. But because of the top-down influences, that's why I wouldn't be adding into strength for these names. And then you see Broadcom under pressure this morning. I think semiconductor stocks do exhibit leadership in uptrends. But right now, I think we see one more downdraft before we get back into that sort of reassertion of the uptrend.
Where do you see rates going in this positive uptrend for stocks? Do they have to go lower?
It's really interesting because what we've noticed is that the direction of yields is almost less important as it pertains to market sentiment than the trajectory or sort of the velocity of the move. So when they're running up strongly, that tends to have a negative impact and vice versa. Right now, we're looking for stabilization above around 4%. It's about where the 50-day moving average lies for the 10-year. And after that, we're looking for more consolidation, sort of a grind sideways to lower, perhaps for a few weeks. And that might not influence sentiment in the way that it has done.
So the high that was established in October on the 10-year, that holds?
For now. So we ultimately think it will be broken because of that long-term upside momentum behind yields. But I don't think it'll happen in the near term.
Wait, you think it will be broken, though?
Eventually.
That yields are going to go higher? Because then obviously stocks are going to have a problem.
Yeah, well, and it's just a matter of when does that happen, right? The 434 level is the resistance. It's very, very...
I always love when Scott comes on here because I don't know what it is about Scott, but I swear that man comes on and just like his tonality and the way he kind of comes across, it can come across as very like defensive. So it just always cracks me up because it puts people on their back foot because it's something about the way he comes across every time, man. So wait, so that's going to be a problem for stocks. So I always appreciate him. I've really grown to like him over the years. Let's just put it that way.
Widely followed. Above that, I do think that would be a drag on equities. There's no real resistance nearby beyond that level. Mm-hmm. So I do think that would certainly impact.
Why would it happen, though? I mean, what's going to push rates beyond that 434 level, right? If we think that the data is getting a little softer around the consumer for certain, and the Fed is, arguably done, maybe they go one more time. What's going to be the catalyst to push rates up?
The charts won't answer that question, unfortunately. So as a technical strategist, I'm just looking at the trend and the momentum. So to me, the force is momentum, but what the driving force of that momentum is really more of a macro question.
What is the reaction when you talk to investors when you present this then? Because they're probably asking the same question.
Well, when I say 5.25 is the next resistance, there's a gasp, and reasonably so, because it's very much higher than current levels. I don't think it's a near-term concern, but I do think that it kind of begs that the higher for longer argument is valid from a technical perspective. We've seen what we believe to be a secular shift in interest rates.
for crude, we've seen a big rise. This morning, we're watching it up by about 1.3% on WTI. What do you see for that in terms of the momentum into the back half of the year?
It's been interesting. Energy resurfaced in August as the best performing sector of the S&P 500, and that's brought its ratio versus the S&P up into its 200-day moving average. So it's at a proving ground in our work, and so is crude oil. Crude oil is right up against resistance. It's testing it right now at $83 per barrel area. A breakout above that would act as a positive catalyst likely for energy stocks more so than what they have seen. And we do have indications of a basing phase also in natural gas prices.
There is an argument that that energy as a sector should recoup some of its percent loss as an S&P component. Are you a buyer of that it should go back towards historical norms?
I don't know if I agree that things need to mean revert in that way. But I feel like momentum is really the key that we want to watch. And when energy has momentum, which it did over the last couple of years, well, we want to be there. But when we look at energy right now from a longer term perspective, it really has shifted from 2021, 2022, and it looks less compelling to us. So I would say I'm less convinced that would happen.
Okay, less convinced of energy. And what's interesting? I see a lot of people, Wall Streeters specifically, kind of hopping on the energy bandwagon now at this point in time. And my thought on that is, it's an interesting time to believe that crude's going higher over the next, 3, 4, 5 months. And the reason being is, we're about to go, obviously, heading into fall time and then winter time, right? And just typically that's not a very strong time period for crude oil. Now, obviously, if you have any sort of weakness that comes in the first half of 2024, that's going to add to potential losses when it comes to crude oil, because then that would be seen as more recessionary. So if you're bullish on crude, and what's so interesting is a lot of these bears are bullish on crude. If you're bullish on crude, then you're bullish on the economy. It's as simple as that. It's as simple as that. You cannot be bullish on crude oil and think crude oil is going to 100, 110, 120, 130 and not be bullish on the economy. This doesn't work that way. If you are really worried and you're really bearish about the economy, you should be bearish on crude as well. That's what happens, man. So anyways, that's that. Nvidia, I'm looking super forward to getting into Nvidia here, a little talk around this, because Nvidia is one of those stocks that everybody looks at and, it's so expensive now. Based upon what? Based upon that it's gone up a lot this year? Or based upon valuation metrics?
Research, his new notice titled, "Dare We Say Nvidia is Now Cheap?" Yeah, Ben, welcome. Dare we say? Nice to phrase it that way, because a lot of people would argue with that, but yet you argue that it is when you take a look at the multiple based on calendar year 24 earnings, and when you...
I like that. A man with something in his pants, okay? That's all I'll say about that. Not one of these chickens out here like, Nvidia, it's gone up a lot, I don't know. Like, hey man, make a freaking call. Either go short or go long. Do something.
Compare it on EV to EBITDA basis or EV to sales basis even, to a Microsoft, to an Apple, et cetera.
Yeah, well, when you adjust for growth, there's outsized growth here. We're looking for 40+% growth in sales and EPS, and that's probably really conservative. So right now it's trading at about 29 times next year's number. It could be a bargain. And their TAM is growing really fast too. And those numbers look really conservative.
So why is their total addressable market growing so quickly? It's just the sell-through of the AI chip specifically makes the total addressable market much bigger?
Well, I don't know. It depends how you want to look at it. The cloud giants are spending like crazy in this market. And, Google just had an event this week, and they announced an expanded partnership with Nvidia. And it looks like they're going to be spending a ton on the H100 super chips, which have a huge margin and huge ASP. And Nvidia is the Intel inside for AI, to borrow a pun from many years ago. And you need Nvidia.
Before we go further here, let's talk about valuation. Okay, 29 times, so basically a 29 forward P. That's the same that Apple trades at. Apple's revenues are going down. Nvidia's revenues are going up over 100%. Nvidia's bottom line is up 800+% year over year, right? Apple's trying to we'll see if they even grow. So tell me, Is Nvidia super undervalued, or is Apple insanely overvalued? Or is it maybe Apple's fairly valued and Nvidia super undervalued? Or you are convinced that this is just a few quarters of extreme strength from Nvidia and then their numbers are going to start going down again. If that's your consensus, what do you have to back that on, right? What do you have to back it on that you believe like all their business is just going to go away? Because the bottom line is, even if they just consistently did these numbers, never mind if they do bigger numbers, right? The stock's a deal here. I've actually considered buying the stock recently. And I know it sounds crazy because it's gone up so much, but at the end of the day, if you're at 29 times, unless your business just falls completely apart, you're looking actually pretty cheap. That's why I say, I can't wait till people are buying Nvidia at $1,000 in a few months from now. That's going to be entertaining.
To serve customers, to serve AI, and the clouds are rushing to do it. And then it's giving rise to a whole new GPU as a service, CoreWeaves, Lambda Labs, all these second.
And if it's at 29 times, 2024 numbers, right? I mean, we're talking about, it's a freaking deal. Unless their business completely falls to pieces, it's actually a steal deal at less than $500 a share. It's crazy.
Here, GPU as a service firms as well. So there's a lot of spending, and we are yet to see whether the apps all come and the enterprise adoption comes, but the spending cycle is going to last well into next year, probably through next year.
So the bears will say that there could be over-ordering, that there's a lot of pull forward of this. And you actually make the point that they're trying to build a more durable stream of revenues, that they are looking to create this sort of ecosystem. Can you explain that? Because I feel like that is, the notion that it's a one-off, it'll sell its chip and it's done, is the pillar of the bear case at this point.
Yeah, I'm really glad you asked this question. Every once in a while, a special company comes along that's a platform. This is one of them. So there was Apple, there was Microsoft, but every once in a while, one of these comes along. It's very rare. And Nvidia is probably the only company in semis that has the power to do this, to really be an end-to-end full-stack platform. What happens when you're successful doing that is you will generate an outsized proportion of the profits for that industry, and it's more durable than people think. Just look at Apple. A lot of people thought Apple would be cyclical. The multiple got really low, and obviously now it has almost a 30 PE.
It's true.
This company is probably one of those special companies. They're getting into software, cloud services, and they're generating a ton of cash now, so they're going to buy back stock, potentially like Apple can.
Can AMD not do that?
Not yet, no. They don't have the software moat. 15 to 20 years ago, NVIDIA made decisions around software that no one can touch. These were decisions made, decades ago. You can't just get into the market with a ported code. And this is, there's emulation. There's certain things that happen that developers take very seriously. And they're trained and they're used to NVIDIA, and they want to use it in the clouds, and they want to use it for AI apps. You can't really...
Yeah, that's one of the cardinal sins of investing, is assuming everybody can just do what another company's doing. It's a cardinal sin of investing. Because I hear so many people, all these companies are going to be able to do what NVIDIA is doing and have all this. No, that's not the way this works. It's the same logic as saying, Ford and GM, they can just do what Tesla does. No, it doesn't work like that. Or Huawei and Samsung can do the same thing Apple can do. No, it doesn't work that way, man. These companies have very specific moats, very specific strategies that, it takes 10, 20, 30 years to kind of implement, get in the right place, and then you can kind of be there for the upside, right? Whereas other companies are just many times late to the game, very late to the game. And then you're playing a game of catch-up, but the problem is you're trying to catch up to somebody that's also moving forward as well. And if they're already several years ahead of you, who's to say they're not going to continue to remain several years ahead of you, right? So then you're always trying to catch up to where they used to be at, not to where they're going.
Just go in and take a big share. What likely does happen is the 80-20 rule, 90-10 rule, where there could be a second player, but I don't see their share, going below a dominant level. And I see them leading this market and enabling it, frankly.
What kind of reception did you get to this call today?
Well, some people, look, you definitely got a lot of eyeballs on it.
On the ride home, or you're good?
I don't need security on the ride home. I mean, look, it wasn't that hard of a note to write.
I don't even think, oh my gosh, 730. I don't even think it's crazy. I think somebody should have $1,000 price target on Nvidia. Tell me it's too much to pay 60 times next year's numbers for Nvidia. Based upon what? Based upon you think the whole market's going to collapse for them? If you're so convinced that, where's the data? 60 times next year's numbers would be a joke, and that would put this stock at $1,000. If you're growing revenues by over 100% and you're growing your bottom line by 800+%, it's not big. Like, that's not even close to being overvalued. Even at $1,000, unless you think growth rates are going to absolutely collapse for the company.
Because the numbers are the numbers. I just pointed it out. I would say that some folks are like, whoa, there's a digestion period going on right now, and sometimes it's just good to...
Yeah, I feel like I'm not the only person that thinks this, okay? I think there's some big money out there because, listen, I was looking at Nvidia call options recently, okay? And they're expensive, very expensive. Even 1 year out, even 18 months out, I'm talking even $800 strikes. I'm talking even $1,000 strikes. Big money you got to pay up for those babies. And I'm like, the stock's not even 500. So an $800 strike or $1,000 strike, and I'm like, who's buying all these? Okay, somebody knows something. So all I'm gonna say is, people think the price is high now. People thought Nvidia was high at 250. Now they're looking at 500 and they're like, oh, that's actually low. And then wait till they're buying it at 1,000. That's gonna be fun.
The obvious is we had a big run into the call, and a lot of folks were like, well, is there double ordering? Is there this? Is there that? And people got concerned about that kind of stuff. Is supply meeting demand? And then sometimes you just have to take a step back and you have to say, are we being compensated for the growth? And look, management is going to be on the road at a lot of conferences. There's a lot of positive news flow to come. I think they're going to do a great job of explaining their moat, the end demand, and how they are creating a platform. And when you look at the growth, you'll go, yeah, I'll take a stab at that because it is cheaper now. But, the fun is the revisions are so robust that you got to keep up with it.
Yeah, I can't wait to see Wall Street putting out $800 price targets, 950s, and then 1,050s, and then $1,200 price targets. That's going to be quite entertaining. I appreciate everybody joining me as always. Thanks so much, folks. Thanks for being subscribed. New all-time high subscribers in the history of the channel. I appreciate each and every one of you for being here as always. Always got some fun videos to react to, and I'm sure we'll have a lot of interesting ones this coming week, which there shall be, okay? Check out my description area for all the goodies, all types of stuff, whether you want to follow me on IG, whether you want to follow me on Patreon, whether you want to apply to join my private group, all that good stuff, description area. Much love and have a great day.